Hello, everyone, and welcome to this special webinar on GST. We are just about 3 days away from the first anniversary of GST in the country. It was one of the most radical reforms in terms of indirect tax. And to gauge what has GST gotten to the picture this year, and also figure out its impact and what the future holds for us. We have with us today Mr. M.S. Mani from Deloitte, who would first be running us through a small presentation, followed by the questions that we'll try and answer. Had a lot of questions, but we'll try and definitely answer as many as possible. So, Mr. Mani, if you want to start off.
Thank you very much. So I would just like to begin by saying that when we talk of GST, we have to just keep in mind that this is the largest tax reform that has been attempted anywhere in the world. I'm not aware of any country which has got an economy of our magnitude, 29 different states, various union territories, multiple set of laws, and 17 taxes and a dozen cessors, which are all being subsumed by one tax. So at the outset, I would like to mention that a task of this complexity has not been undertaken anywhere else. And we need to be exceedingly proud of the fact that this tax, which started out last year, is now on the verge of becoming a 1-year-old. And as they say, when you move from being 11-month-old to a 1-year-old, you move from being an adolescent to a child. So that is the stage at which we find GST today. Having said that, we just need to bear in mind that a reform of this magnitude would certainly not have been possible without any implementation challenges. We will just discuss some of the implementation challenges that we have seen under GST. These are being discussed not with a view to critique the authorities or to say what could have happened. It is just as a reminder to all of us, because the last 1 year, for all the people who have been dealing with GST, whether as salespeople or procurement people or tax people, has been a very, very challenging time for everyone. Therefore, if we just have a recap in terms of where things stand in terms of GST, and before that, what were the implementation challenges that we faced, this is something which we believe would remind all of us of the journey that we have already traveled, and also prepare us for the journey that is ahead. When GST was formulated, there was an understanding that in terms of rates, all the rates that would be used for GST would be the revenue neutral rates. What was meant by the revenue neutral rates was keeping the rates constant and similar to the earlier combination of the VAT and the excise duty. Consequently, the Rate Fixation Committee came out with a set of rates initially, which were very close to the erstwhile rates. However, after some point of time, they realized that despite the fact that the intention was to ensure revenue neutralization, there were a lot of demands to reduce rates because the rates became very visible. Let me just give an illustration. The rates on the majority of FMCG products, whether it is toothpaste or soap or shampoo, earlier under excise and VAT was 12.5% of excise and 13.5% of VAT. Here we have to bear in mind that the 13.5% of VAT was not levied on the base value, but the base value plus the excise duty. When we consider that cascading, the effective rate that we saw on many FMCG products was close to 27.7%. The closest rate to 27.7 being 28. In their wisdom, the Rate Fixation Committee kept this rate at 28. But what happened after that? Most people who earlier would be used to a rate of 13.5% VAT suddenly found that the rate had gone up to 28. This perception was largely because of the fact that excise was an invisible tax. The majority of buyers and consumers did not realize there was an excise embedded in the price of the product. And to that extent, excise in the past on all B2C transaction had taken the characteristic of an invisible tax. The moment we had GST, it suddenly became a highly visible tax. Consequently, there was a need to rationalize the rates so that the rates were aligned to the rates which people believed to be fair and meaningful. That is the point of time where during October 2017 and November 2017, we had a rate fixation exercise once again, where several rates were dropped down from 28 to 18. Some of the items went down from 18 to 12, and there were a few items which even went down from 18 to 5%. These rate changes, while they are very good from a business standpoint, because they have effectively reduced the price of goods and services, also made it very difficult for businesses to grapple. So if people had inventory which was invoiced at the higher rate, what would they do with that stock? If distributors and wholesalers had been billed at the higher rate, what would they now do with inventory which was coming at the lower rate? And obviously everyone wants a lower rate and no one wants a higher rate. So this led to some level of supply chain inefficiencies across the spectrum for a large number of companies, and they had to grapple with this in the initial 6 months of the GST introduction. And that is the reason why the rate changes which were made in GST post introduction became a very, very big challenge for most of the businesses. If we look at some of the issues that cropped up after GST was introduced, the GST law had a very clear system in respect of what were the credits that could be transitioned. So the credits under the earlier system were to be considered under the new system. However, there was a lack of clarity in terms of what happens to certain types of cesses. Here we have to bear in mind that cesses for all practical purposes serve the purpose of a tax as far as the payer of the cess is concerned. So when a person in the erstwhile regime used to pay service tax, most people would consider the service tax rate to be 15%, although in terms of the breakup, it was 14 plus half plus half. But for all practical purposes, service tax was 15%. At the stage of transitioning, there were different rules in respect of the tax transition and different rules in respect of transitioning the cesses, which created a lot of difficulties for business. Similarly, the GST Tran 1 form, which was a mandatory form to be filed in respect of the transitionary credits, underwent a lot of challenges on account of system-related issues. And it took a period of 3 months or so for the tax authorities to fix all those transition glitches and allow transition credit for an extended period. In terms of refund as well, we have seen a lot of challenges during the initial period, primarily on account of the fact that the tax authorities wanted the refund claims to be filed on the portal, and they wanted to compare the data provided in the refund claim with the data which was provided through the medium of the return. On account of the fact that the returns during the initial period were not filed on a timely basis, in some cases with insufficient details on account of lack of clarity as well, the refunds got stuck up. In addition, the refund portal did not function initially, and it was under development for a considerable period of time. That again led to a situation where people were temporarily asked to file manual refund claims, and these manual refund claims were to be reconciled with the electronic returns that had already been filed. That led to delays, and that is what has led to 2 instances in the last 3 months of refund camps being conducted by the government to expedite the entire refund process. If we move on to some of the other specific issues that the GST has got till now, we have to bear in mind that the GST, while it is very broad and it has subsumed many of the taxes and cesses, is still not an all-country, all-industry tax. We have alcoholic beverages which are kept out of the purview of the constitutional amendment. We also have petroleum products which are included in the constitutional amendment, but are kept out during the initial phase. What this means is that the alcoholic beverage manufacturers and the petroleum industry players, while they pay GST on many of their inputs and their input services, they are not permitted to avail a set-off because their final product does not attract GST. This is increasing the cost of doing business for many of the non-GST products, and there is therefore a reasonable expectation that at some point of time, these will also become part of the GST basket. GST also started with a very good system of advance rulings, and the advance rulings in GST were covering majority of the issues that most businesses would face. This again is something which was very essential because we do not have any precedents in GST for the initial period of 2 to 3 years. All of us have been accustomed to having multiple precedents on various interpretational points because the erstwhile laws were 60 and 70 years old, and that had resulted in interpretational issues being resolved through the aid of precedents. In case of GST, in the absence of precedents and in order to provide some degree of certainty and predictability, the authority of advance rulings was constituted in each state. This authority took some time to take off because it was not fully functional in the initial few months. As on date, the challenge that we see is that the appellate authority, which is the authority to redress grievances after an advance ruling application has been disposed of by the advance ruling authority, is not yet operational in many of the states. In addition to this, since each state decides matters without necessarily considering what the other state has done, and the rulings of one state are not binding on another state, there is also possibly a need to have a national level authority for advance ruling. GST fortunately did not result in any inflation as far as the country was concerned. This is an area which was a key concern for the government, and the government has taken a lot of steps to ensure that there is no inflation at retail level or at wholesale level which is attributed to GST. One method by which this was done was by having a very detailed system of anti-profiteering. And the anti-profiteering studies and investigations have ensured that no manufacturer and no distributor is able to collect more amount attributed towards tax compared to the past. The challenge that people have faced in this is the absence of a prescribed methodology. In the absence of a methodology, how does FMCG determine whether anti-profiteering is there or not? Do they have to refund any money to the government? How does this happen in respect of infrastructure? How does this happen in respect of real estate? And how does this happen in respect of pharma? If each company adopts an individualized approach, it is quite possible that at a national level, we will have multiple approaches being followed. And therefore, there was an expectation that there would be some kind of a methodology that would be prescribed. That has not been done till now, and possibly that is in the works. Reverse charge issues continued under GST as it continued under service tax before. The good thing that we have seen in reverse charge is that the tax collection at source, which was prescribed for e-commerce companies, was initially put on hold. Similarly, the reverse charge, which was levied on transactions between unregistered dealers and registered dealers, was also put on hold. Both of these were initially put on hold for 3 months, after which it was extended. The final extension is ending 3 days from now. But as we understand, we are likely to see an extension for a few more months. It could be 3 months or more, which we will have to wait and see. But it does appear that there is no immediate possibility of either the tax collection at source mechanism coming into force on 1st of July, or the reverse charge on unregistered dealer transactions coming into force on 1st of July. There are various specific challenges that taxpayers in various businesses have faced, and some of them include the initial challenges in obtaining a letter of undertaking for export of goods, on account of the fact that the MEIS and SEIS scripts could be used only for payment of basic customs duty, and it was not expanded for GST. Also, on account of the fact that in GST, the taxpayers were allocated to the state and central authorities in terms of a random formula, which was a system-driven exercise. All of these have led to various challenges that people have faced on an ongoing basis, and some of these are being gradually resolved as we speak. There are many earlier concepts, such as the concept of sale in course of import and export, which no longer exist. There are a few ambiguities which still continue in GST, and it is expected that all of these would be resolved as we head towards the first GST anniversary. Moving on, in addition to resolving some of the challenges that we have overcome over the last 1 year, there are certain expected changes that we hope to see in the next 1 year or so. While the government has not been prescriptive in terms of a timeline by which we can see these changes, most of these changes are in the domain of the government. They are already aware of it. And at some point of time, we expect that these changes would see the light of the day. As I had mentioned earlier, petroleum products are presently outside the ambit of the GST, and there have been various discussions in the GST Council meetings to include petroleum products under GST. This can happen in a couple of ways. It can either happen by petroleum products coming into GST in its entirety, or it can happen by central excise duty being nomenclatured as GST and replaced by GST, while the state level VAT would continue. It can also happen that a few petroleum products, such as natural gas and aviation turbine fuel, where there is some kind of similarity in terms of the rates levied by various states, come under the GST ambit initially. And subsequent to that, we have other petroleum products like petrol and diesel and naphtha, which come into GST. Each of these modes of including petroleum products have got its own upsides and downsides. But the larger expectation is that over the next 1 year or so, we will have most of the petroleum products included under GST so that the GST truly becomes broad-based. There is also an expectation that most of the taxpayers have in terms of ease of compliance. GST during the initial phase with a GSTR 1, 2, and 3 has been fairly complex for most businesses and has been exceedingly complex for most of the SMEs. At present, we have a combination of a GST 3B and a GSTR 1, and what is expected is that these forms will be combined and there will be one common form which is expected to be very, very simple. Yesterday, we also heard Mr. Adia mentioning that we would be having a modular approach to compliance, where the entire GST return would be built on the basis of various modules, and each business would go for the modules that were relevant to it. If we have a modular approach in GST, where a particular business need not fill up any data that is not relevant to it, that would be very welcome, and that would be extremely helpful even in improving the level of compliance that we have seen in GST. Centralized registration has been one of the key requirements for large taxpayers. This is something which the services business have been grappling with a long time. The banks, the insurance companies, the telecom, and the IT service providers who were accustomed to having a centralized registration under the erstwhile regime have now suddenly seen a big upsurge in their compliance efforts. And that is something which is also resulting in all of them possibly paying the same amount of tax, but distributing the tax amongst various states. There is therefore a very reasonable expectation that many businesses have that the tax payment that they make could be one, and there could be a distribution mechanism which functions at the back end to distribute and funnel the tax to the respective states. This is something which has the potential of dramatically reducing the compliance for many service providers, and at the same time ensuring that the tax collections of the government do not get reduced. We are also expecting some very specific areas to be taken up, including an exemption for digital payments. There has been a conscious attempt to promote digital transactions in the country, starting from the demonetization exercise, and the GST has only served to increase that further. If the government looks at exempting GST on digital payments or providing a reduced rate for transactions which are on a digital mode, that could give a very, very big increase in the number of transactions that are transacted digitally. In terms of the revenue sharing mechanism that is agreed between the center and the states, this is again subject to the 15th Fiscal Commission, and the terms of reference of the same already indicate that there is significant work in progress in terms of how the revenue sharing mechanism would work after the conclusion of the 14th Fiscal Commission. There is also discussion on introduction of an e-wallet. The e-wallet was initially being contemplated in order to take care of some of the export benefits. This again can work also as a credit mechanism to pay various taxes. This will require some amount of technology interface again. That level of technology should be done in a manner which is very, very comfortable even to smaller businesses. But at some point of time in future, we hope to see e-wallets becoming a reality. There are specific issues in respect of single window clearances, where people are still required to obtain clearances from multiple authorities for multiple claims. And at some point of time, if the claims that are filed by various businesses are also consolidated on the basis of PAN, that would be very, very welcome. So with this, we can possibly move over and get into discussing some of the specific issues that people have raised, right, and discuss them in detail.
Wonderful. So let me ask the first question. You have dealt with so many companies, small and big. What are some of the common errors that you still see taxpayers making? And I mean, what are some of the things that taxpayers should safeguard now? I mean, we are 1 year down the line, but some errors that you can think of.
Okay, so primarily what we have seen is that people make inadvertent mistakes with the data. And depending on the manner in which invoices are generated, depending on the structure of the accounts payable and accounts receivable in each organization, there is a process of data extraction. And in that, we have seen very often that people do not upload the data in time, or the data upload is not clean data. What we have to bear in mind is that the tax authorities today have only access to your digital data. And therefore, if what is uploaded is incorrect in any which manner, it is very difficult to rectify that later. So my primary recommendation would be very careful of your data sources, be very careful of what you upload. And once you upload, you may not have a chance to modify anything in what you have uploaded.
Right. Is there issues around input tax credit as well? I mean, I do keep hearing taxpayers talk about problems around how do you claim input tax credit and the entire system around it.
Okay, input tax credit in GST functions on the basis of a negative list. Now, this negative list is a fairly small list on which no credits are permitted to anyone at all. The larger issue on input tax credits has been the fact that many of the employee-related payments and the employee-related benefits which many companies make possibly would now attract GST. For instance, we have recently seen a decision of the Advanced Ruling Authority in Kerala, which said that when there is a recovery in respect of canteen services that are provided by the employer to an employee, there would be a need to pay GST. Because of this decision, which was specifically in respect of canteen services, there is an apprehension that many companies have that many other employee-related issues, such as recovering notice pay from an employee, recovering parking charges from an employee, making a bus recovery from an employee, whether all these would attract GST. So at some stage, I believe it is very necessary for the government to clarify that in case of transactions which are covered by the employer-employee relationship, irrespective of whether the recovery is from the employee or paid by the employer, there is no question of a GST on that.
Right. Now that you talked about the advanced rulings, we take one question which is around this area. Diksha Priyani has asked the question that what is the status of conflicting advanced rulings? Are we moving towards centralizing the advanced ruling mechanism? We are facing huge difficulties in employee food providing services.
Okay, so that's a very good question. And I don't think anyone visualized a scenario where multiple states would provide different rulings on the same subject. And there have been a few rulings among states where, which I would not say are contradictory, but where I would say that the interpretation of the law has been a little different. Now, there are two ways of dealing with the situation. One of these ways is to ensure that if there is an advance ruling on a particular aspect issued by a particular state, this becomes more or less binding on any other states. And if any other state wishes to disagree with this ruling, then there has to be a national level body of advanced rulings, which takes a call in terms of what needs to be done. Now, you would be aware that this is normally followed as a method of judicial prudence, where you have two courts of the same rank. If there is a divergence of opinion, then these matters normally get referred to a larger bench. And if we follow the similar principle in respect of advanced rulings, at some stage in future, it would be necessary to have a national level body which has the authority to deal with differences in interpretation amongst various states on similar issues.
Right. So, Ritvik, you has written, what will be the impact if petroleum products and alcohol are added to GST?
Okay, so I thought I had mentioned that before. I think the difference that we have to make between alcoholic beverages and petroleum products is as under. Alcoholic beverages cannot become part of GST unless we have one more constitutional amendment. The earlier constitutional amendment took a lot of time, so possibly that is something which is not expected in the near future. Unlike alcoholic beverages, when we come to petroleum products, these are already covered by the present GST law, but the GST Council, in its wisdom, initially decided that these would be covered possibly after the introduction of GST on other products. We have to bear in mind at this stage that petroleum products contribute significant revenues to most of the states, and therefore the states also had some very genuine anxieties in terms of how their revenues would be impacted. At some point of time in future, petroleum products would certainly come under the ambit of GST, but when it will happen and by what method that will happen, we will have to wait and watch.
Right. So, there's another question from Rameshwar Patnaik, who's written, will it not be possible for real-time transfer of tax component to government account as and when an invoice gets paid? He's gone on to ask, will it be possible on part of the consumer to pay the tax directly to the government account in a business to consumer transaction?
So technically, that is something very interesting question. So technically something that could be feasible, but if that happens, what all of us have to be prepared to do is to pay a tax virtually every day of the month. And for some large companies, which possibly generate 3,000 invoices per day, they would need to pay tax 3,000 times in a day. And that is possibly which would become a huge compliance burden. So my take would be that we should be grateful to the government that they are permitting us to pay tax once in a month instead of at each transaction level. If all of us are willing to pay it at each transaction level, I'm sure the government would be thrilled and they would support the technology that supports that.
So, Shivam Saxena has written, what is the impact of GST on SMEs?
That's a very good question, and I actually missed out covering that in the earlier part of the discussion. SMEs, really speaking, have found it very difficult during the initial parts of GST. And they have found it difficult for a few reasons. SMEs by default do not have access to the kind of advisors and to the kind of tax consultants that many of the large firms have. SMEs do not have access to the kind of IT infrastructure that many large companies have. And GST from day one has been an entirely IT enabled platform on which every taxpayer is required to transact. In this situation, all the SMEs took some time in settling down. They had a lot of challenges initially in terms of even knowing what is the GST return to be filed and what details the GST return contains. And that is the reason why during the initial period, many of the SMEs went and spoke to various governmental authorities and requested them to give them some time to file the returns. And the government, in its wisdom, during the first 6 months, was extremely understanding and liberal with most of the taxpayers who asked for more time to file the returns, which led to a situation where there was a 6-month interval between the period to which the return pertained and the period when the return is to be filed. This has progressively been reduced, and possibly at present we are in a situation where every month's return is being filed during the next month. But during the initial period, yes, the SMEs had a very tough job.
Right. I have lost track of, uh, what is being filed now. Just for the benefit of our viewers, what is it that we are filing? The GSTR 3B for which month? Have we caught up with all the months that we were extending? Which month of? I think we're still continuing with the last fiscal, is it?
Okay, so we have actually caught up with the pending work, and all the pending work is now over, both for taxpayer and for the government. What we are engaged now in the month of June is filing the returns for the month of May. So the returns for the month of May and the tax payments for transactions which have happened in the month of May were due on 20th of June. The normal experience has been that while 60% or so of the people would make the payments by 20th June, there would be some set of taxpayers who would need a little more time to extract the data and file the return and make the payments. And that typically happens between the 20th of the month and the 30th of the month. This is again the reason why for the last couple of months, the government has been sharing the GST revenue collection data on the first of the next month, unlike the earlier period where the data used to be shared on the 25th and 26th of the month.
Right. Also, we are talking about a new set of forms or a new simplified form. Although we do not know the contours of it and how it will look like, once that comes into force, taxpayers, I presume, will have to fill up for April to whenever that comes up, right?
Okay, so the good thing that we have seen in GST is that most of the changes are prospective and there are very few changes which are retrospective. And therefore, if we have a new form that comes in, let us say next month, it is unlikely that taxpayers will be asked to fill up the forms for the past period as well. So if the form is announced in the month of July, it would possibly relate to the supplies and transactions during the month of July, which are to be reported in the month of August. But what is expected is that the form, when it comes out, will be a modular form with each taxpayer only populating those heads which are relevant for that particular taxpayer. So there would be, for instance, a module in respect of small businesses. There would be a module for service providers. There would be a module for traders. So if a taxpayer is operating in the capacity of a trader, he need not fill up anything of the data which is required for manufacturers or service providers or importers or exporters. he directly goes to the module that is relevant to him, fills that up, makes the payment, and he's done.
Right. So Ashish Nenan has written, please do touch upon the benefits and the drawbacks of e-way bill. I think e-way bill has been around for 2-3 months now. What has been the general feedback?
Look, as far as e-way bill is concerned, most of us would be aware that we did not have a very good experience in the initial part when it was introduced around 6 months back. So the e-way bill was introduced, and then after a couple of days, the entire e-way bill system was deferred in order to ensure that it is a seamless experience. The relaunch of the e-way bill after 1st of April has by and large been incident-free. The portal is able to handle the relevant load. E-way bill was initially introduced in a phase-wise manner from April, where interstate transactions were taken up first, intrastate was taken up subsequently, and even intrastate transactions, there was a staggering in respect of the states. So every 15 days, 6 states were brought into the e-way bill purview for intrastate transactions, and this seems to be working well. Now, when we look at the benefits of e-way bill, we have to bear in mind that the e-way bill is primarily an anti-evasion mechanism. And therefore, to a very large extent, if the e-way bill is able to ensure that most of the cases which do not attract a tax are exempted, that is good. But if there are a few transactions that attract tax but are not paying tax, then it becomes very difficult to evade it with the e-way bill.
Next question which is coming is from Hiten Shah, who's saying, so we are charging common area maintenance. Can we avail FTC on the major expenses incurred for repairs of building, eventually capitalize in building under fixed assets? It's a long question.
Yeah, it's a long question and it's a little fact specific. So I would just say at this stage that there is no prohibition to taking a credit of expenses that you incur, provided these expenses contribute to the activity of maintenance charges. What we have to bear in mind is that a double benefit is not permitted in GST, and therefore if the tax paid on the building repair is already capitalized, and if depreciation is claimed on that, then it is not permissible to take GST on a similar expenditure.
Right. Moving on, the next question is from Shamuk Prasad Mahanta. He's written, rule on ITC on taxable supply of service and exempt supply of service. That's a question mark. Whether taxable person required to maintain separate accounts for exempt supply and and taxable supply for ITC.
Okay, so I'm not too clear on what the question is, but let me just try to make an attempt on what he's looking at. The rules relating to taxable supply and exempt supply make it very clear that there is a need to keep separate records in terms of what are the taxable supplies and what are the exempt supplies. If there are a few inputs and input services that are used exclusively for the exempted supplies, these have to be segregated. If there are a few inputs and input services used exclusively for the taxable supply, those again need to be segregated in your own interest. But if there are certain common expenses and common inputs which are used both for the taxable supply and exempted supply, then it is quite possible to prorate them and take a credit of the prorated amounts only.
Okay, right. So interesting question here from Bimaljit Hansra. Has GST addressed the taxation problem correctly so far? His second question is, why tax rates so high he's listed some products like spare wood products, etc.
Okay, so GST was intended to combine multiple taxes into one tax and improve the ease of doing business in India. Because in the past, we had over a dozen taxes, over a dozen cesses, some state taxes, some central taxes, states levying tax at various rates on certain products, and GST has attempted to cover all of that by having at least one common rate for a product all across the country. And until now, we have not seen a scenario where any state is attempting to change the rate of tax on a particular product in that particular state. So hopefully in GST, we will see the same rates being levied all across. As far as the rates of tax being high are concerned, the 28% rate is levied on very few products. It's not levied on large number of products. Initially, it was levied on many products, which subsequent to November 2017 have been brought down. And today also there are a few products where possibly there is a good reason to bring them to 18. But that I believe the government is looking at it on an ongoing basis and will do the needful when the revenues are also robust.
Next question has come in from Subhash Garg. He's written procedure for cancellation of registration and time taken by department. I think he's talking about cancellation of GST registration.
I don't see any reason why the GST registration should be cancelled, but if at all it is to be cancelled after being taken up, there is a procedure prescribed in the GST law in terms of which the returns need to be filed, pending tax payments if any need to be made, and then the registration gets cancelled.
So Nidesh has written, the credit reconciliation is a hectic task. What is your take on this? And is it possible for invoice to invoice matching in GST?
I completely agree that the credit matching is indeed a very difficult task. It is possible to do that only in a situation where you use a lot of technology to aid you. Because bear in mind that GST gives you a lot of data which can be converted to a technology portal which can help you with the reconciliation. As far as the reconciliation of the vendor invoices are concerned, we are hoping that in future the government would make it easier to see the transactions on screen and reconcile them on screen. Originally, this was contemplated through the method of a GSTR 1, 2, and 3. But since we have seen that whole framework being modified, possibly we'll have to wait for some more time for the government to come up with a method by which any purchaser can see the transactions uploaded by the seller and do an auto reconciliation of the two.
Okay. So Vandana has written, how has GST impacted the economy in terms of the retail sector? And if I can just maybe add my point in that, the smaller retail players.
Look, the retail sector even earlier was subjected to a VAT, and therefore to some extent the retail sector was also already exposed to indirect taxes. What the retail sector did not realize earlier was that the price that they were paying had excise duty embedded in it. Now, excise being embedded as part of the price was always an invisible tax, and therefore to the retail sector in the past, VAT was the only visible tax that they saw. In addition, certain cities such as Mumbai also had an octroi which the retail sector had grappled with. After GST, what we have seen is that the retail sector has largely dealt with GST very well because they are accustomed to dealing with VAT. Major change for them was the high rate of tax that they saw being visible. But since majority of the products sold by the retail sector are today at 18%, except a few products like color television and washing machines and refrigerators, which continue at 28%, by and large, it has not been too difficult for players in the retail sector.
Right. Arjun has written how, I mean, you did touch on it, but I'll just take up this question nonetheless. It says, how will the return simplification affect the flow of input tax credit? Will ITC be provided only on the invoices uploaded by the supplier when the new system is implemented?
I think we will have to wait and watch in terms of what happens to the new system when the new system is rolled out. I'm reasonably certain that there will be a need for invoice matching at some level, because the fundamental architecture based on which the Indian GST is modeled requires that there has to be a reconciliation between the seller's invoice and how the buyer accounts for that particular invoice. Now, this can happen in various ways. It can happen at a level where the details on the invoice match, but the need for the seller to pay the tax is not linked with the need for the buyer to take the credit. So the tax payment by the seller and the credit taking by the buyer can be de-linked events during the initial phase, and these events can be linked possibly at a later phase. But the need to link up the invoices at both ends is very necessary from a tax administration point of view, and therefore possibly we should expect that to be more detailed in future.
Right. We have got a lot of questions, but sadly we're running out of time. So this possibly is the last question, and comes from Tina Virmani, who says, how has e-Bill implementation and compliance, has compliance improved? Because so far organized players are struggling to improve volumes.
Bill has certainly contributed to increase in revenues, and I think the yardstick that we can employ for that are twofold. The number of transactions which the Bill portal has been handling has significantly increased since the launch of the Bill. The Bill portal presently has the capacity to handle approximately 1 million transactions per day. So the fact that there are more and more transactions on the portal indicates that movement of goods is happening, because every transaction on the Bill portal indicates a subsequent transaction of movement of goods from one buyer to another buyer. The second point is the revenues in GST have become robust after Bill launch. The month in which Bill was launched, which was the month of April, we have seen a collection in excess of 94,000 crores. Here again, as a comparative, we have to bear in mind that the past record on central indirect taxes indicates that in the first month of the financial year, normally there is a 6 to 7% of the annual collection. If we compare that with the revenue targets of the current year, it compares very favorably when we say that we have collected in excess of 94,000 crores in the first month of the financial year, which again is the month in which the Bill was introduced across. During the month of May, the Bill system has been extended on intrastate transactions as well by most states, and by early June, every state in India has introduced it. So possibly when we get the revenue collection details for the month of May, we will see much more of robustness in the revenue, which can be attributed to the introduction of Bill.
Great. I think we have a lot of other questions, but sadly we have just run out of time. I think it just goes on to prove that there is still a considerable amount of doubt when it comes to GST, and I think that will only increase when the new forms come out. So I think this is something that we can do another webinar when the new form comes out. But till then, thank you so much, Mr. Mani, and thank you for joining for the special GST webinar. And we hope to do more of this in future again.
Thank you very much.